Good morning on Wednesday, November 28th. There are two charts we're going to look at today. The first one is the Forex chart, US Canadian, and the second one is a stock DRYS. So, starting with the Canadian, we'd rallied up to a resistance level and we were looking for a potential short, and it's pushed up through this resistance level at 97.98 now, and looks like it may well reach up to 102. So this is a daily chart we're looking at. I'm just going to show you weekly quickly, and you can see the overall context is that we've had a strong down move for 2007, and now we're in the middle of a rally, a counter trend move for the most significant rally in all of the year. So the question is whether that rally is going to meet some resistance, we end up having some great shorting in the future, or whether we want to trade bullish in the meantime. Well, most of us are intraday traders, so that means while the rally is heading up towards the next resistance, we do have some bullish opportunities intraday. Here's the daily chart again. I'm going to go down to a 4-hour chart, and you can see how we moved up since November 7th, and then we stalled. We put in a long stall from about the 15th till just today or so, and now it's starting to move up out of that consolidation. So we're putting in a higher swing high now, and if we put in a higher swing low than we did the last time, we can buy dips. And as long as it maintains that chart of higher swing highs and higher swing lows, we can buy dips and take profits on rallies. We should do our fib studies as I have on this chart right here, and I see there's some great support, SK support right down here. If it could pull all the way back down to 97.25, that'd be great. We don't know if it will, but there is some super support right down there. There are higher support levels. I'm looking at a 4-hour chart, but if you go down to a 5-minute chart, you'll see some additional support levels at higher levels for entry. Anyway, if we continue putting high swing highs, high swing lows, we want to be buying the dips and selling on rallies. However, if it does turn down, I'd wait for it to turn down below 97, then we can start shorting rallies again, because then it'll be in bearish mode. So actually I'll wait for go down below 96.54 at this point, because there's another support level down there. Anyway, looks like it wants to work its way higher for now. It's not moving really fast because we've had a major consolidation here. So if we continue putting in high swing highs, high swing lows, we can buy dips. Otherwise, a breakdown below 96.54 would put us into shorting territory, and we can start shorting rallies and taking profits on dips. Now let's look at the stock chart. DRYS, dry ships, daily chart. So we've had a great move down since October 29th. Now we have a bit of a gap up and a bit of a rally. Someone was asking me in email, how do you do your fib studies? When do you know when you have a swing point? So looking at this daily chart here, I want to do my fib studies based on the furthest highest swing high back on October 29th to the recent swing low, which was just yesterday. And then I'll pick another swing high on the move down November 7th down to the swing low of yesterday. And then there's another swing high here on the 14th down to the swing low of yesterday. So we do this to calculate our resistance studies, to find resistance should we want to enter short. Now the question is, the swing low of yesterday, how do you know whether to use that swing low because it might be taken out? Well, we only use the swing low when it rallies. So once a rally is in place, it's pretty easy to know which data point to use because there's an obvious swing low right here. Think of it this way. If you're driving down the street and you turn left in your car and then you keep going, well, how do you know when you've turned left? Well, when you look back and you're not going the same direction anymore. So that's how you know whether you have a swing low here to use for a fib study, is when it's rallied and you can look back and see we're not heading down anymore, we've rallied. So now what we'd like to see is a rally up to SK resistance for us to short. I'm going to go down to a 60-minute chart here, and we can zoom in and we can see we have a couple of resistance levels right here, and we're coming up on one in this market right now, right around 83.75 or so, and then there's one a little higher up between 88.80 and 93.25. So let's call it roughly 90. It's quite a wide zone. Let's call it 91 to 93. In that area, there's another resistance area. So both of those would be great for shorting if the market does in fact turn there on a 60-minute chart. Above there, the market starts getting bullish again, so you don't want to be shorting too aggressively if it gets above there. So In summary, DRYS has had a great move down, great shorting opportunities. Now we're getting a significant rally. The question is whether it can stall at one of these two resistance levels. The first one would be great, the lower one, around 83 or so. That would be a great one for entering short if we find some resistance there on intraday charts. Otherwise, the next one up is a potential short, but that, if you have a look at this chart, it would be a significant rally. Let me take my fib studies off here just to clear up the chart, and I'll do roughly a downtrend, something like this. Okay. If we rally up to the higher fib level, that means that this downtrend will be in question. It will have challenged this downtrend. Okay, we're right at the tip of that downtrend right now, that downsloping blue line. If we rally up to a higher fib level, we will have exceeded that downsloping blue line, so the trend would be broken. This trend line would be broken, so that would be a significant problem, and you would want to be really careful about shorting, though there may still be opportunities there. Above that level, there's no chance you want to look at shorting for a while because it would have become quite bullish. Anyway, and the inverse is true. If you happen to be long down the bottom here, these two levels are great places to consider taking profits. So I wanted to use that as a bit of a tutorial. I know I'm throwing in a stock chart here with the Forex chart, the Canadian, but I'm using it for a basis of a tutorial. And it doesn't really matter what the chart is. The techniques are the same, whether you're trading Forex stocks or minis, whatever. The technique's the same. Just the title at the top of the chart changes. And I wanted to use the stock chart as a tutorial in our Forex update for today. So that's it today.